So let us start today's session. Today's session is a very important session, as all of us know, related party transaction. So now we've started a series on related party transaction because everybody is very confused of how to go about it and of all the amendments coming in. So today the topic is intricacies of related party transactions. And we have our very own Bala sir and Sudhakar sir. Sudhakar sir, the chief speaker for today. And we have with us Ms. V. Mohana. She is the panelist who has joined us for today's session. So a brief introduction about Ms. V. Mohana. Ms. V. Mohana has over 27 years of experience and is currently Vice President in Corporate Secretarial Department of Reliance Industries Limited. She is heading a team handling compliances of infrastructure companies, NBFCs, sports and investment companies. She carries expertise in the areas of corporate legislations, compliances, and corporate due diligence. She also has hands-on experience in handling acquisitions, mergers, demergers, financial close for projects, fundraising activities, private equity investor relationships, and ensuring compliances under the contractual agreements. Prior to joining Reliance, she worked at Bicon Limited, handling secretarial function, including ESOP-related activities. She also worked at GMR Group as part of the Management Assurance Group, assuring the management of compliances across the group under various statutes, and later heading secretarial function of the energy vertical of GMR Group. She holds a bachelor's degree in commerce and is a member of the Institute of Company Secretaries of India and is a law graduate. We welcome you, madam.
Thank you.
Sir, today's chief speaker today is Sudhakar sir, who's going to take us through related party transactions. And of course, with us, we are sure that this session is going to be a really good one. Now over to you, sir. We can start the session.
Before that, Mohana, if you can say a few words about the topic of the day.
Yes. Thank you, sir. At the outset, I would like to thank Mehta Mehta, Aditi Patnaik of Mehta Mehta, Mr. Sudhakar, Mr. Balasubramaniam for inviting me for this discussion. I would love to be part of it. And today's topic, intricacies of related party transaction, is very important and it's a very hot topic. The reason being, for a layman, what's a related party transaction? Is a transaction between two entities who have pre-existing connections or common interest. But is related party transaction actually debarred or illegal? The answer is no. Then why are we talking about? Because they have a potential for conflict of interest. They can disrupt the business environment. And we have witnessed this in many scams that has taken place in corporate India. To name a few of them, we know what has happened in ILFS, where there was an evergreening of loan. And we know of Jet Airways, when there was no expenses, the expenses were hijacked and then so the money was moved out by way of a related party transaction. Kingfisher, there was a diversification of funds to sports activities. We don't know of Manpasan Beverage, where with the help of Shell subsidiary companies, where the turnovers were hijacked, there was bogus sales reported. So it has, for every scam, the key center issue or the modus operandi has been related party transaction. And this has helped them and it is not the transaction, there are no two parties in it. There is a single party who has ensured his interest. And so what is the consequences in the market because of this? The return to the common shareholders gets reduced. The image of the corporate world gets tarnished with respect to the corporate governance. The expectation of the shareholders in the equity market goes down, and overall the economic growth of India is also affected. So it's a chain reaction. So how has this RPT transactions been conducted? It is by manipulation of accounts, diversification of funds, siphoning of funds, and window dressing of your accounts. And is it possible without collusion of all the parties involved? No, there has been collusion of all parties like promoters, directors, credit rating agencies, auditors. So, and it had gone unnoticed for quite some time, but now it has become too big to get ignored. So that's why the government has adopted to new regime, regulatory regime, which has been the very important topic for us to discuss. Is this new amendments which has been brought again, does it debar the legal related party transaction? The answer is no. They just say that get the approval of your audit committee, especially from your independent directors. Get it disclosed. So let that your shareholders get to know. Get a prior approval for your material transactions. So let the shareholders get to know. They're just putting an emphasis on transparency and accountability. But what is the impact on CS professional because of this? It's since the definitions and the amendments have been broadened, the impact on CS professional has gone up. Previously, only the CS of listed entity or the KMPs of listed entity were worried about related party transaction. How do we account for it? How do we disclose it? How do we ensure compliances? But that is not the case anymore. Even the KMPs of subsidiary companies of listed entity are to be aware for the listed to ensure compliance of the listed entity. So that is the daunting task we have in front of us, because the definition of the related party transaction, the approval of audit committee, disclosure, prior approval of shareholders, everything has been brought out in detail. And I think it would be very interesting to hear Mr. Sudhakar. Over to you, sir. Thank you.
Thank you, Mohana. Bala sir, you would like to say something?
Yeah. Good morning to all of you. You all would have recollect that for the last 2 weeks, we have been actually talking on the related party. The first session, we talked about the concept of related party, the important definitions we understood. And during the last session, we actually gone through the related party transaction, what it is, what are the intricacies, etc. and all this. Now, as Mohana has puts it, having a transaction with the related party is nowhere it is actually debarred. It is, you can do it. There is no problem at all. But the only thing is, it should be in the larger interest of the people. It should not be only to the particular interest of the related party themselves. That should not be the case, because the conflict of interest comes in. And again, the stakeholders' wealth addition gets affected. Company's image again going down, as rightly she has put. The related party transaction is not only under the company side, it is everywhere. If you go to the income tax also, they are also looking at the related party transaction and the arm's length transaction. Even if you go for the import and export also, there is a special valuation cell which has been actually created where they look into the related party transactions. I definitely recall whenever we used to get any material imported from the overseas parent companies or subsidiary associate companies, the very first question is the option of invoice-based assessment is not done by the Central Excise and Custom people at all. Because there is a related party, unless until it is proved is a normal transaction, we will actually increase the value per se by 20% more, because there is always a related party transaction consideration is there. It is a very big struggle in proof beyond doubt that the transaction has actually taken place as if they are not related to each other. That is the crux of the matter which is actually coming over here. And not only that, it is more so in case of the listed companies, because listed companies, it is the money which has been actually collected through the capital market from the investors, especially the small investors who have put their hard-earned money. The regulators would definitely want to safeguard their hard-earned money, their interest. That is the purpose of this. That is why today the governing regulation is not only the company side, but also the LODR regulation for the listed companies as well. And the recent past, I also come across regulators have actually started looking at the various compliance-related issues. As Mohana said, yes, you can do it, there is no problem, but to go through the proper approval mechanism, make a disclosure, let it be a transparent. Now, very recently, I came across the case where transaction has been done without putting to the audit committee approval, etc. and all this thing, the regulator has taken, and in the process, what has happened is the penalty is not only levied by the company, but also the directors and also the company secretary and also the chief financial officer. Because basically the reasoning, the social speaking order, which was actually spelled out in that case, because basically the financial transactions responsibility is the CFO, and the company secretary is actually a compliance person who has to ensure that everything is done. Because even the Company Act says under section 205, the company secretary has to ensure and assist the board of directors to comply with all the applicable laws. That is what it is there. So in the light of that, nowadays, the responsibility of the professional is increasing. We need to look into the intricacies of the related party transaction, to the concern, to the transaction by nature, required approval, required disclosure, etc. These are all very, very important matters. And today we definitely have two big emissaries. One is Sudhakar Saraswatula, who is very well known for his lecture across India. He has dealt on this concept many forums with the practicing people in the student community and the north, west, south. There is no boundaries actually for him. And he is a very expert in this field, and he himself is going to share this intricacies of the related party transaction, which will be definitely very value adding for all of us. I am personally very eager to hear from him. Definitely, I know it is a continuing education. It's any time we listen from him, we always get a value added to our knowledge. That is definitely the case. I am personally thankful to Sudhakar and Mohana, with her 2.5 decades experience and working with many companies. She will also add to the practical aspects of this in this subject, and I am looking forward to hear from you also. Over to Sudhakar, please.
Thank you very much, Bala sir, for your kind words, and good morning, friends. And as Bala sir has mentioned, today we are entering into the third series of our RPT webinar series. Thanks, Mohana, for joining us and going to share your experiences with us. In fact, friends, before I take up my topic, several forums I used to say this. Earlier, the company secretaries who were working for private limited companies, they used to think that they are very small company secretaries and they used to feel very low. And the people who are working for listed companies, they used to think that as if they are the brilliant guys. And the company secretaries who are working for unlisted public companies, they used to be somewhere in between. So when Companies Act 2013 has come, the private companies, the privileges available, lot of privileges have been removed. Most of the provisions which are applicable to public companies were equally applicable to private limited companies. And especially the 3 firebrand sections, which I used to say always, they are applicable to private companies also. That is 188, and section 90 and section 135. These are the most complex sections which are equally applicable to private companies also. Now, because of the amendment to Regulation 23, the subsidiary companies of a listed entity, okay, they all also have to comply with more or less the same provisions what a listed company has to comply with. So the company secretaries who are working for private companies, public unlisted companies, they don't need to worry at all. Several times I used to say why this, I am reiterating this is only for one reason. Several times I find the company secretaries crave to work for listed companies. Despite the fact they are working for good corporate houses, they used to think that there is no listed company here. I want to what's called as an expand my horizon, working for listed companies and going to join some small listed public companies which are of no use at all. Now, with these words, let me share my presentation and we will go ahead further. I'm sure you are all able to see my presentation. Am I correct?
Yes, please, speaker.
Yes.
Yeah, thank you. So let us see the related party transaction. As we know that whenever we have to comply with the sections, we have to see both Companies Act as well as the listing regulations. Unlike SEBI listing regulations 2015, Companies Act 2013 has not defined the related party transactions. In listing regulations, Rule 21 Jet C defined what is a related party transaction. That kind of definition is not there in the Companies Act. So if you want to identify what are the related party transactions, you have to simply go to section 188 subsection 1, that A to F. Those are the transactions when you are entering into with a related party, you have to ensure the compliances prescribed under section 188. So now what are those A to F transactions under section 188? Or any contract or arrangement with a related party with respect to the following transactions. These are the transactions which trigger section 188 unless until you got the exemptions which are provided with, you have to comply with 188 provisions. What are the transactions? Like sale, purchase or supply of any goods or materials, selling or otherwise disposing or buying of property of any kind, leasing of property of any kind, availing or rendering of any services, appointment of any agent for purchase or sale of goods, materials, services or property. Such related parties' appointment to any office or place of profit in the company, its subsidiary company or associate company. Here, holding company is not covered. So we can say that any related party's appointment to any office or place of profit to the holding company, that will not trigger the section 188 compliances. Underwriting the subscription of any securities or derivatives thereof of the company. There were certain keywords are there like your goods, services, office of place of profit and all. This is certain, I said in the last webinar, we have discussed what are goods, what is services, what is the office of place of profit, what is the ordinary course of business, what is arm's length transaction. These are certain key terminology, which is very, very important while you are interpreting and implementing this section 188. Now, another important feature you have to notice in these 6 clauses is that the word any is used everywhere. Sale, purchase or supply of any goods or materials, buying or selling property of any kind, leasing of property of any kind, rendering or availing of any services, appointment of any agent, such related parties, appointment to any office. So everywhere they have used the word any. So this any is going to kill you virtually when there is going to be, God forbids, an inspection. Because the word any is broadening the provisions which we have to comply with. So any goods means you have to be very, what's called as, you have to be very, very careful while interpreting the word goods, any services, any property, any agent, any office or place of profit. So the lot of importance is to be given to the word any. These transactions which are not to be entered into except with the consent of the board, of course, we will discuss in detail in the next webinar, where we are going to have the approval mechanism, how the related party transactions are to be approved, by whom they are to be approved and all, we will discuss that. But just to have the continuity, you have to understand that these transactions are to be approved by the board of directors at the board meeting by way of passing a resolution. There are 3 requirements are there. Number 1, the board has to take the decision. That decision is to be taken by passing a resolution, and that resolution is to be passed only at the board meeting. It means you cannot approve a related party transaction under section 188 by way of a circular resolution. Such requirement is not there as far as the audit committee is concerned under section 177. So you can have the audit committee resolution by circular resolution. Several times a question comes, sir, can we take omnibus approval by way of a circular resolution? That we will discuss in detail at the next webinar, not in this webinar. Similarly, related party transactions are also defined under the accounting standards, but this is only for the purpose of disclosures, not for the purpose of compliances. Apart from that, sale of goods, fixed assets, receiving or availing, rendering services, agency arrangements, leasing or hire purchase of agreements, there are some more transactions out there which are related party transactions which require disclosures in the financial statements. Those are transfer of research and development, license agreements, financial transactions, including loans and equity contributions in cash or in kind, guarantees and collaterals, and management contracts, including for deputation of employees. We can understand this if you remember in the very first webinar, I have mentioned that for the sake of understanding, we can call it as related party transactions and transactions with related parties. In the previous slide, what we have seen, we can call them as related party transactions, which trigger section 188. Whereas these transactions are transactions with related parties. And these transactions require approval from the or prior approval of the audit committee under section 177. So for the sake of easy understanding, I used to call them as transactions with related parties. Now let us see the related party transactions under the listing regulations. As I mentioned that Rule 21Z(c) defines a related party transaction is transfer of resources, services, or obligations between a company and a related party, regardless of whether a price is charged or not. So please remember that related party transaction does not have to have a consideration. Several times a question has been asked, okay, sir, when there is no consideration, what is the problem? Without any charge, how can a person get benefited? Certainly, you can give a benefit, you can give an undue advantage. Without even, you can also discriminate the people without even charging anything also. Several times I give an example that, say, for example, if you, any practicing company secretary, do a secretarial audit of, say, Reliance Industries or any other group company without charging anything. And if he is my related party, can I have it? Tomorrow you cannot say, look, he is not charging. What is the problem? Because despite the fact he is not charging any remuneration for doing that secretarial audit for a large company in our group also, but still what will happen is in his profile, he is going to write that he has conducted secretarial audit of XYZ company. That itself may give a lot of value addition to his profile, and it will, he can get further business or whatever it is and all because of that particular audit, what he has done for it. So related party transaction, even without any consideration also, can give some kind of an advantage. That advantage may be an undue advantage. That's why the problem is there. Another thing I want to...
Sudhakar, in fact, in many time I come across with the small private companies. What is that? We are just giving only the nominal rent. What is the problem in that? There is an argument put forward without realizing the transaction is actually per se entered between the related parties and saying it is a nominal amount of the rent we are charging for the premises which is given. Why should you take it? What is the point? And all these arguments used to be there actually in the earlier. As you rightly said here, whether price is charged or no charge, the transaction per se is a related party transaction. That's all.
Similarly, one more thing also is there. In fact, if you see the what's called the committee which was constituted for making suggestions, the SEBI has constituted a committee on related party transactions. That committee, if you read that, it says that what is this thing, say for example, 10% of the turnover, okay, material related party transaction, 10% of the turnover of the consolidated turnover of the company. Now, for some companies, 10 crores itself is a big amount. For a company like Reliance, even 10,000 crores is not a material related party transaction, even to its subsidiaries also. So that's why they say they have reduced that particular, that we will discuss it a little later. So whether, and another important thing you have to understand in this definition is they have used the word transfer of resources. Again, the same thing, resources is a very big word. It is not defined. And one need to be very careful whenever you are entering into a transaction with a related party. If you are transferring, is it falling under the definition of resource? Is it falling under the definition of services? Is it falling under the definition of obligations? Because these three words, resources, services, or obligations, are really a big ticket items. A transaction shall be construed to include a single transaction or a group of transactions in a contract. As I mentioned, it is a very wide scope in comparison with the transactions under the Companies Act 2013. Now, this definition has been amended And part of that amendment, which is coming into effect from 1/4/22, that is already came into force from 1st April 2022, last year it was. And the remaining portion is going to come into effect from 1st April 2023. That is almost a week ahead or so. Sorry, it is also already, in fact, not get triggered because we are already in the month of April. So for this financial year, it is already came into effect. Now let us see that what is the one. Related party transaction means a transaction involving a transfer of resources, services, or obligations. Till now, it is the same, there is no change, between a listed entity or any of its subsidiaries on the one hand. Earlier, it was only the listed entity, but now listed entity and any of its subsidiaries on one hand. Please note that associates are not covered in this. Several times people ask me the question that whether associates are also covered. Associates are not covered, only it is subsidiaries on the one hand. And a related party of the listed entity or any of its subsidiaries on the other hand. So on one hand, you say it is listed entity and its subsidiaries. On the other side, related party of the listed entity or of any of its subsidiaries. Why this amendment has come? Because till recently, because of the rigor of that related party transactions, some companies, what they were doing is they were making the big ticket items transacting through the subsidiary companies. So that means you are doing it beneath the surface. You are not bringing it over the surface. Because of that, the compliances which were envisaged under Regulation 23 were not required and were not complied with. So several entries were getting camouflaged because of this particular modality, which was adopted by the corporates. So now, as suggested by the committee which was constituted, they said that these transactions are also to be brought to the surface. Because of that, they have amended the definition of related party transaction, and they have brought the subsidiaries as well as its related parties also to the surface. So what is the impact of this? Let us see that also. In view of this revised definition, effective 1st April 2022, the following transactions shall fall in the related party transactions. Transaction between the listed entity and its related party. This was there earlier also. Transaction between the subsidiary of the listed entity and its related party of the subsidiary. This was also covered earlier because it is a transaction between the listed entity and its related party, transaction between the subsidiary and its related party. Earlier also they were covered. The new thing what is coming into picture now, came into picture was the transaction between the listed entity and related party of the subsidiary, the transaction between the subsidiary of the listed entity and related party of the listed entity, and transaction between subsidiaries of listed entity and related party of subsidiaries. Virtually everything and anything has been come. That means if they are related party either to the listed entity or to any of its subsidiaries, if the transactions are entering into by the listed entity, by the subsidiary or by the subsidiaries, everything is getting covered under the definition of related party.
So to add over here, you have very beautifully brought out the various limbs to the definition. If you see the last one where people get confused, transaction between subsidiaries of listed entities and related parties of subsidiaries. So the subsidiary company KMP will not know the related party of other subsidiaries. So it becomes very difficult for them to even understand and then go a further step to find out whether it is a related party of my fellow subsidiary. A related party of other subsidiary is nothing but related party of your fellow subsidiary. So it becomes a daunting task for the holding company to first prepare the list of the related party consisting of all its subsidiaries and circulate, and that has to be understood by the subsidiary KMP to ensure compliance with the last limb. I mean, according to me, it is the difficult one which everyone have to understand for compliance.
Now, the second part, which is going to come from 1st April 2023, this is another complexity is added to this, how we are going to deal with only the time will give us that maturity. But I have some kind of an ideas which I will discuss with you. It says that a listed entity or any of its subsidiaries on one hand and any other person or entity on the other hand. That means that person is not related to you. It may be anybody and everybody in the cosmos, maybe even extraterrestrial also, you can say, on the lighter side. The purpose and effect of which is to benefit a related party. That means you are entering into a transaction with a person who is not related to you, with an entity who is not related to you. But the purpose of the transaction which you are entering into and the effect of which is to benefit a related party of the listed entity or any of its subsidiaries. This is a slightly complicated, provided we have proper understanding of this. This I will explain to you a little later. So regardless of whether a price is charged on a transaction with a related party shall be construed to include single transaction or group of transactions in a contract. This remains the same. Whether a price is charged or not, it is immaterial. So this I have already explained. Hence now RPTs entered into by subsidiaries are also to be approved as they are going to be impact the consolidated financial statements of the listed entity. Now let us see the action points for compliances. What are the action points we have to comply with RPT? Mohana has mentioned some already. Let me also say that. But before going further, let us revisit the revised definition of related party under the listing regulations, which I have explained to you. But for the sake of continuity, let us revisit the definition once again. Effective 1st April 2022, the related party definition under the listing regulations has been amended as any person or entity forming a part of the promoter or promoter group, whether they hold the shares or not, it is immaterial. Anybody and everybody who is a part of the promoter or promoter group, how to arrive at that? As I told you last time also, you are filing your quarterly, what's called a shareholding pattern with the stock exchanges. There, you have to also give the list of promoter and promoter group and their shareholdings. Any person or entity holding equity shares of 20% or more up to 31st March 2022 and 10% or more effective 1st April 2023 in the listed entity, either directly or on a beneficial interest basis, as provided under Section 89 of the Companies Act 2013 at any time during the immediate preceding financial year. These complications also I explained to you last time very elaborately and very comprehensively, so I'm not going into that. Shall be deemed to be related party. Now, because of this, what are the action points? Identify a fresh or related parties and revise the list of related parties at global level. Global level means at the corporate level, which is the ultimate corporate, which is having that family tree, subsidiaries and subsidiaries and subsidiaries like that. So ultimately what you have to do is, because you have to ask your subsidiaries, please give me the list of your related parties. So first and foremost step, what you have to do is identify a fresh related parties and revise the list of related parties at global level in view of the revised definition, Rule 21ZB of the listing regulations. You have to prepare that. Now, another question, quite often there is a confusion that last time also we have discussed. As far as subsidiary is concerned, when it is identifying its related parties, it has to identify as per Section 2, subsection 76 or Rule 21ZB. I have clarified to you, when subsidiary is identifying its related party, it has to identify only as per the Companies Act, not as per the listing regulations. So every subsidiary has to identify its related party as per the law applicable to it. And suppose if the subsidiary is a listed company, of course, obviously you have to see both your Companies Act and the listing regulations. If the company is only unlisted subsidiary, then obviously only Companies Act is applicable. Because listed entity and its subsidiaries on one hand and listed entities related party and of the subsidiaries related party on the other hand. So you have to first of all identify the list of related parties at global level. Include all persons or entities belonging to the promoter and promoter group, because there is a change in the definition. Also identify all shareholders holding 20% or more of the shareholding at any point of time in the financial year 22-23, because they are going to be related parties for the current financial year, that is 23-24. And similarly, also identify the entities or shareholders holding more than 10% during the current financial year who will be related parties to you for the next financial year, that is 24-25. And monitor shareholding pattern at regular intervals to determine whether any person entity satisfies this threshold. Now, this is as far as the identification of related parties are concerned. These are the action points which we had discussed last time also. Now, what are the action points for the revised RPT definition? Circulate the list of related parties at global level across the listed entity and its subsidiaries. Second thing is before that, you have to also procure the list of related parties from every subsidiary while preparing this global list. And you have to identify the ongoing transactions with any of the subsidiary by the listed entity. And you have to see the compliances required. Similarly, you have to also circulate the list of related parties of the listed entity as well as the subsidiaries across the group. And you have to ask them that if any transactions are there with these companies, they have to inform the Secretarial Department of the listed entity. Procure information about the nature and quantum of transactions of the subsidiaries with its related parties. Closure coordination between the Finance and Accounts Department and the Secretarial Department is very much required. And it is the responsibility of the Secretarial Department to create the awareness among the accounts and finance colleagues. And also that wherever this kind of transactions are there, one more question quite often it is asked is, when you are entering into a transaction with a related party, while you are arriving at the threshold limits, what are envisaged under Regulation 23, is it to be taken listed entities transactions and the subsidiary transactions together, or they are to be separated? For that, you have to go back to the definition. What it says is that on the listed entity of any listed entity and its subsidiaries on one side, any transaction entered into with the related party on the other side. We have the definition of related party. We have the definition of related party transaction. Simply you have to implement that and ensure the compliances. That means what? If Mr. A, who is a related party of the listed entity, or the related party of any of its subsidiaries, and with that Mr. A, I mean A Limited, suppose, both listed entity and its subsidiaries are dealing with, you have to consolidate all the transactions together before arriving at the threshold limits. Now, revised RPT definition effective 1st April 2023, which is now coming, the second part of the related party definition, which I have mentioned to you, which came into force about a week before. This says that effective April 1st, 2023, the following transactions are also fall under the related party transactions. Number one, the transaction between the listed entity and any other person or entity. That means a third party who is not your related party. But if the transaction is there between the listed entity and any other person or entity, the purpose and effect of which is to benefit a related party of the listed entity or its subsidiary. Say, for example, Reliance Industries Limited is entering into a transaction with A Limited, which has nothing to do with RIL. And the purpose of the transaction and the effect of transaction is that because of this transaction between A Limited, any of the related party of RIL or its subsidiaries are getting benefited. How does it happen? Say, for example, if I give a loan to my related party, obviously it is a financial transaction. And because RIL is a listed entity, it definitely has to comply with that whatever the Regulation 23 compliances are there, or 188, 177 compliances are there, we have to comply with. Say, for example, if RIL is giving that money to A Limited, and the A Limited is giving that money to my related party. Obviously, there is no transaction with my related party in this process. So I don't need to go for any kind of compliances. So this is actually a kind of round robin thing. Several companies which Mohana has mentioned, several transactions which Mohana has mentioned, in some companies what she has mentioned, these kind of round robin transactions were happening. Routing the transactions so that, or camouflaging the transactions in such a way, you can avoid the compliances. But this also, the technical committee which has been constituted to suggest some improvements in the RPTs, they have also brought in this, that several times the corporates are camouflaging the transactions and not what's called incurring the compliances what are required. So they brought this particular thing. Similarly, transactions between the subsidiary and any other person or entity, again, the purpose and effect of which is to benefit a related party of the listed entity or subsidiary. That means whether the transactions are entered by the listed entity or by its subsidiary with a third party, the purpose and effect of which is to give a benefit to the related party of the listed entity or of its subsidiary, that will also fall under the definition of related party transaction. Another important thing is, several times this question also has been asked, is it purpose and effect, or purpose is there but effect is not there? I will go strictly as per the words which have been provided in the law. There is absolutely no ambiguity. There is no scope for interpretation. That's why I will take it like both purpose and effect to benefit a related party are to be there. Mere purpose, but the effect is not there, then it doesn't fall under this particular definition. Or effect is there, but
the live examples of round tripping of the loan, which we have witnessed in the recent past in respect of the ICICI Bank. ICICI Bank has actually given the loan to the Videocon group of company. The money in turn has actually come back to the husband of the Chanda Kochar, who has been running the company to benefit him ultimately. That was the live example which we saw just now, what you quoted actually.
Correct. So both the purpose and effect are to be there. Mere purpose or mere effect may not trigger this particular provision. Thus, various combinations of transactions included within the ambit of related party transactions. So now the company secretary's job has increased manifold. Effective 1st April 2022. Further, it has increased effective 1st April 2023. In fact, on the lighter side, several times I used to say that in the secretarial department, you have to have a subgroup or a group whose exclusive functioning is to ensure related party transactions only. Because the way it is there, the way that definitions of both related party and the related party transaction has been amended, it really, how big conglomerates, like whether it is Reliance, whether it is Tata companies, Mahindras, Birlas, big companies will really have a problem. And several times I have said this also, that humanly it is impossible to trace all these transactions. You need to have definitely the help of a technology. And I'm sure that all the big conglomerates are anyway, they might be working on the SAP or ERP already. For them, it is not a big task, but for the medium-sized companies, there would be indeed, they have to ensure that proper systems are in place to identify all these kind of transactions. Now, let us see the purpose and effect. What is this? How to identify these transactions? Certain clues may be there. Normally, these transactions are structured transactions with an intent to give a concealed benefit to the related parties. These are all, mostly these transactions are indirect transactions. 99% of the times, they will never be a direct transaction. And these transactions are definitely a structured transaction. Means what? Lot of planning, lot of thinking will go. How to route this transaction without getting caught. That's why I call it as these are structured transactions with the indirect transactions. Second is these transactions are not entered in the ordinary course of business and are exceptional in nature. These are all one-off transactions. Always it happens, one-off transactions. They are not a routine transactions, or these transactions are never in the ordinary course of business. Maybe sometimes it may be, but to a large extent, they are not entered in the ordinary course of business. Though not easy to identify such transactions, obviously, it is not impossible to identify these transactions. No doubt about it. Especially for the company secretaries, it is very difficult to identify because they are not into the operation of accounting. Because accountants, it may be slightly easier for them to identify. But sometimes it may so happen, even for them also, they may not have a clue. When you scrutinize the ledger, I mean, in the chartered accountants who are there, they will come to know that whenever we go for an audit, we scrutinize the ledger. In fact, in the good olden days, each and every transaction we used to scrutinize. These days, because of the volume, only some test checking and all might be happening. So whenever you scrutinize the ledger, there may be some unconnected and long pending loans, advances, guarantees, securities, they may be there. What is the purpose of scrutiny of the ledger? In fact, when I was doing my articleship, I have been told this, that whenever there is a loan outstanding for longer periods, interest is getting accrued but not paid. These are all the things which give you signals, red signals that something is happening here. You have to focus upon that. The same is the case here also. To identify these kind of transactions, you have to see the unconnected transactions with your business, if anything is there. That means some kind of a weird transaction which is taking place. And that weird transaction, obviously, it may not come to the surface. It has to be probed into, or the scrutiny is required and all. So one has to have some kind of vigilance and diligence with that. It will not be impossible to find out. These transactions, as I told you, may be such structured transactions and need to be probed further. What is the role of audit committee now? As amended under the listing regulations, only the independent directors who are the members of the audit committee have to approve the related party transaction. This itself has imposed an arduous and onerous responsibility on the independent directors who are the members of the audit committee. Because earlier what used to happen was, in the audit committee, you have independent directors as well as non-independent directors, maybe executive directors also. Even now, audit committee can comprise of executive directors as well as independent directors. But as far as the related party transactions are concerned, they are to be approved only by the independent directors who are members of the audit committee. And as we know that all the related party transactions are to be approved by the audit committee. So the volume of work of audit committee again has increased manifold, because subsidiary companies, certain transactions also come to the audit committee for its approval. So, and second thing is, the audit committee also, only the independent directors have to give their approval to this related party transactions. Definitely they are under severe pressure. Independent director itself, that position is a very very tricky area, that if you see the risk reward proportion, I always say that risk is more than the reward. So one has to be very careful while accepting the independent directorship. More so now, post this amendment to the related party transactions, Regulation 23, if any independent directorship has been offered to you, you have to think 4 to 5 times, if not more, before accepting that. In fact, I told several forums that post my superannuation from RIL, I have received 3-4 independent directorships. Out of that, 2-3 are listed companies only. I couldn't accept that, not because of any reason, but because of that I couldn't have the courage to accept that, considering the compliance culture and other things also there. So considering the entrusted responsibilities, audit committee members are to be more diligent as well as vigilant. And as informed earlier, though it is not easy to identify such transactions, audit committee members need not be perturbed because of this purpose and effect transactions which are come into force. But only thing is that they need to take the assistance of the internal audit department. They have to give more importance to them. And wherever the related party transactions are there, the focus of the internal audit department is to be a bit more. And in fact, in many bigger companies, the internal auditor reports to the audit committee directly and not to the CFOs as such. So audit committee has to take the internal auditor into confidence and have to assign these kind of tricky transactions to him to give them the report on them. Normally, these transactions are, as I told you, it is a one-off transaction. So, and at the same point of time, the audit committee may also ask the CFO and the CEO, both, either or both, I can say, to say that these kind of transactions are not there. By merely getting a certificate, they cannot wash off their hands as far as their responsibility is concerned. But certainly, it can insulate them to some extent. At the same point of time, it will also bring the seriousness to the CEOs as well as the CFOs. So such transactions can't be part of omnibus approval and can be easily identified, which may have to be probed further. What I'm trying to say here is that when the transactions which are coming on omnibus approval, the focus and orientation, and the specific transactions which come for approval, the focus and orientation will be slightly different. So these kind of structured transactions will definitely come for specific approval of the audit committee. And definitely the audit committee can come to know that these transactions look like unconnected with the business and not a routine transaction. It should appears to be a weird transaction. So why can't it be probed further? So they may ask, as I mentioned, the internal audit team to probe the transactions which lack commercial expertise. Is there any transactions which are lacking some commercial expediency? For example, transactions with such long outstanding advances, book debts, loans, etc. You have given material to somebody XYZ, and XYZ has not paid for next 2 years, and you are not even bothering for that. Means something is wrong with the transaction. You might have given the material, and for the last 2 years, he has not paid, means he must have passed on the benefit to some of your related parties. So this is how these transactions can be identified with. It is also advisable for the audit committee to ask for a confirmation certificate from the CEO and CFO, or CEO or CFO, whichever the company agrees to, that no such transactions were entered into. Now let us see the material related party transaction. The listed entity shall formulate a policy on materiality of related party transactions and on dealing with related party transactions. This is there right from the beginning of the listing regulations. This was there, that listed entities have to formulate policy on materiality of the related party transaction. So the materiality of the related party transaction, what are already defined, subject to the definition, if the company wants to define it further, it can. Such policy shall include clear threshold limits, duly approved by the directors, and such policy shall be reviewed by the board of directors at least once in every 3 years and updated accordingly. So the audit committee of a listed entity shall define material modifications, because now what it says is that any material related party transaction is to be approved by the shareholders of the company. So such policy shall include clear threshold limits duly approved by the board of directors, and such policy shall be reviewed once in 3 financial years. Once in 3 years, I mean. So material related party transaction, once it is approved by the shareholders, if there are any material modifications to that, again, it has to go back to the shareholders for their approval. And what is a material modification? That is not defined under the listing regulations, but it has been given that the audit committee of the company has to define what is material modification and disclose it as a part of the policy and materiality of the related party transactions and on dealing with related party transactions. That means what is a material related party transaction, you will be giving it the threshold limits, what are there, you will be giving it in the policy. In that policy itself, we have to also define what is a material modification. Now, prior to amendment, that pursuant to the explanation to regulation 23(1), a transaction with a related party shall be considered material if the transactions to be entered into individually or taken together with previous transactions during a financial year, if it exceeds 10% of the annual consolidated turnover of the listed entity, as per the last audited financial statements of the listed entity, then it is a material related party transaction, which has to go to the shareholders. That means, as I was mentioning to you last time also I mentioned, in case of Reliance Industries Limited, if the consolidated turnover is say 450,000 crores, and the 10% of the consolidated turnover, that is 45,000 crores, that is when you cross that 45,000 crores, that is a material related party transaction and it requires the approval of shareholders. A transaction involving payments made to related party with respect to brand usage or royalty shall be considered material if the transaction to be entered into individually or taken together with the previous transaction during a financial year, if it exceeds 5% of the annual consolidated turnover of the listed entity as per the last audited financial statements of the listed entity. So there are two, in the case of material related party transactions, there are two parts are there. One part is pertaining to brand uses and the royalty, and another part is all the other transactions are concerned. Now the amendment is only to the part of the brand usage and royalty is not touched upon, that is there intact as it was. Only the remaining portion has been amended to. What is the amendment? Effective 1st April 2022. A transaction with a related party shall be considered material if the transactions to be entered into individually or taken together with the previous transactions during a financial year, if it exceeds rupees 1,000 crore or 10% of the annual consolidated turnover of the listed entity as per the last audited financial statements of the listed entity, whichever is lower. So it is 10% of the annual consolidated turnover or 1,000 crores, whichever is lower. Earlier it was 10% of the consolidated turnover. This is a too extreme step. As I was mentioning in the previous thing, the example what I have given, if RIL consolidated turnover is 450,000 crores, 10% of that is 45,000 crores. So now it is 45,000 crore or 1,000 crore, whichever is less. That is related party transaction. Second, the amount for determining materiality in respect of a particular related party will be the aggregated value of related party transactions, even though they may not be of the same nature and partially transacted by the listed entity and partially by the subsidiaries. This is also I have explained to you already about. Since only the explanation is amended, that means the royalty and the brand, that particular portion is not amended as such. What are the action points now? In view of the revised definition of related party and related party transactions and material related party transactions, the approvals required, the management is to be more proactive in visualizing the transactions. So you have to see that because of the change in the definition of related party and the related party transactions as well as material related party transaction, is there any existing transactions which are falling in the material related party transactions? Of course, this was effective 1st April 2022 only. But since we are discussing it, I am mentioning it once again. This would have been done earlier itself. That because of these amendments, is there any existing transactions which are triggering the material related party transaction, which requires shareholders' approval? At the same point of time, though you have taken some shareholders' approval earlier, but because of the revised definitions, that amounts to a material modification, which may require again shareholders' approval. Those transactions are to be identified and necessary compliances are to be ensured. Need to review that whether any existing transactions fall under the revised definition, and in such case to obtain the necessary shareholders' approval. This I have already explained. All the approvals required are prior approval and hence no transaction to be entered without such approval. Here, some people say that Because by the time I get the approval, it may take time. I have to convene a shareholders meeting, or I have to convene a postal ballot and all. I cannot stop my business. My CEO is not agreeing and all. Nothing doing, because these are all prior approvals. Compliances are equally important. The way the business is important. That's why I said that the management, CFO, CEO, company secretary, all are to be proactive as far as your approvals are concerned. And all these approvals, you take it for granted. They are all prior approvals. No post facto approvals are there. All KMPs have to play a critical in identifying such transactions and in obtaining necessary and requisite approvals well in time. Thank you very much for your patient listening. And I have covered all the important aspects as far as the related party transactions are concerned. Now, if any questions are there, we will discuss with that. Before I receive the questions, Mohana, would you like to add anything further which you are doing practically? You may highlight that. How you have geared up during the financial year 22-23, what exactly in RIL you have done over and above whatever I have mentioned, that you may share your experiences.
Mohana, I will be also interested in knowing one thing. Related party transaction that limit at any point of time during the year. So that is a very, difficult question at any point of time. That is the problem here. Have you dealt with that situation? How you did it? I would be interested in knowing.
So if I have understood your question, if there is an related party transaction arising, during the financial period which doesn't have an approval, is that your question?
No. Because you see, effective from last year, it has been told if the limit exceeded at any point of time. Because we are not monitoring any point of time what is the shareholding and other thing and all when the limit is actually revised. Because normally what happens is in a listed company, all the shares are actually held in the beneficiary's name.
Yes.
So it is only as and when the record date, as and when the things are there, then we get the beneficiary interest, we know what it is. So here at any point of time, whether they have exceeded or not, because see one particular day it would have happened, it would have remained for 1 or 2 days, it would have come back. How do we identify that?
It is of the preceding year. So you have the data already in your hand. It is not of the current financial year. If you see the definition, it says any person holding 20%. So for the current financial year 2023-24, I need to see the persons who are holding 20% or more of the equity shares during any time in the preceding financial year. So I have already the data. Since it's a preceding financial year, there is no issue. If it is of current year, then probably, yes, we will not be able to. This 10% which is effective from April 1st, 2023 is going to apply for me for the next year. So that way, it is not, it is not going to throw a surprise for us to ascertain. Because in the year beginning itself, as per every, now that as Mr. Sudhakar very well explained, the definition has so many limbs. It says the first limb says promoter and promoter group. So you have to list all of them. Then the other limb in the deemed related party is any person who has hold 10% of the equity shares directly or as a beneficial interest holder during the preceding financial year at any time. So that also you can identify in the year beginning and list it out along with your related party list of 276, which is a rule-based related part rule-based definition, and Ind AS, which of course is very wide. So you have the entire related party list prepared based on these definitions for listed companies. But when it comes to an related party of a subsidiary for which the listing agreement is not applicable and only the Companies Act is applicable, the work is very simple and was very simple previously. That they had to just look into section 276 list of related party.
Mohana, 1 minute. What is Mr. Balakrishnan's question is that it is limited to the extent of 20% and 10% of the shareholding at any point of time during the previous financial year. How you will identify that? Because you are not having the shareholding of the members at any point of time with you, you are going to get the benpos only on Fridays. So you will be having your updated ROM only on every Friday only. You are not getting it all 365 days. Of course, if you have an arrangement with the stock exchange, you can get that benpos every day, but it is going to cost you heaven. So
yeah, that is the point. That is the point.
Sir, last time also I explained this thing. You don't need to get a separate benpos. This question has come up several times, whether I need to have a benpos every day. You don't need to have that, because the benpos, we get it on Fridays only. So as per the benpos, you have to keep a track of it.
Yes.
And at the same, one minute. At the same point of time, last week I have also explained that you will have the that what is called as I'm forgetting the word. You will have the before the market starts, you will have the deals. Okay, that what is the deal concerned? Block deals. So whenever a block deal takes place, that point of time, you have to see that immediately whether this block deal is getting affected. Depending upon the size of the block deal, you may have to get a benpos for that particular day to arrive at this particular limits. This is how the company secretaries have to be vigilant. This is what I said. Every day, the listed company's company secretary has to keep a tab of that block deals, anything is taking place. Definitely, you will come to know the block deal in your securities are happening or not happening. This is how you have to do it. Yes, Mohana, you were saying something.
You know, I said that since it's the details are of a preceding year, you have all the details with you, because you also receive benpas. As you rightly said, when you have a block deal, you get the details. You are also reviewing the insider trading every now and then with the software. What is the transactions that have taken place in the shares of your company? So, and since this list is based on this 10% is based off the preceding year, you will have all the details and you can easily ascertain and put them in your related party list. That's what I was also trying to tell. Probably you have also supplemented it very well, sir.
Yeah.
So, and further to answer your question, how do KMPs how we have put in a system in RIL, or how we are working towards it is at a group level. As I told you, for every limb, the list of related party has been identified and a list has been prepared. And at the subsidiary level, every KMP, there is an awareness created and it has to be done. And every CS has to gear up to that requirement. As rightly you mentioned before, CS used to say, I'm not of a listed company, and we used to feel low, but that now that probably with this new amendments, they have to also get geared up. They have to understand the listing agreement requirements, because then only then their transactions which they enter into can go through, provided it has the prior audit committee approval of their listed entity. And if it is a material transaction, then that transaction has to also have the prior approval of the shareholders of the listed entity. So a CS at a subsidiary level has to also know that his transactions can be carried out only when the required compliances under the LODR is done by the listed company. So he has to know well ahead which are the transactions that would get caught for prior audit committee approval of listed entity, which are exempted, and which has to also have the prior approval of the shareholders of audit committee of listed entity. Then they could do the business easily, or else it would be very difficult for them. And also there is one other point that every listed, every subsidiary also tries and gets an omnibus approval done in the year beginning. So now there is one more check has to be done on that omnibus approval, which gets approved, is that any transaction which this subsidiary company has entered into is with the related party of the listed entity or its fellow subsidiaries. And is it then in that case, not only requires audit committee approval, you need to also check the limit threshold, whether it is 10% of exceeding 10% of the consolidated turnover of that subsidiary or that of the other counterparty who is a related party. So if it exceeds, then it requires prior approval of shareholders of listed entity. So that is also an alarming situation. So you cannot now just go ahead with your omnibus approval with your repeated transactions. This analysis has to also to be done, whether it is exceeding, whether it requires audit committee approval if it is exceeding 10% of the turnover of the preceding financial year, or is it exceeding 1,000 crores, you need to go to the shareholders of listed entity. So this is something which the subsidiary company secretary or the KMP has to understand to take forward the related party transactions. With respect to the holding company, post preparing the entire list of related party for the whole group and circulating for everybody to ascertain whether the transaction, any subsidiary enters into falls under the related party or not. They need to also keep tab of 3 limbs. One is, what are the transactions that require audit committee approval, transaction which doesn't require audit committee approval but does require disclosure, and the transactions which require shareholders approval. So it becomes a daunting task for the people at the listed company level to ensure compliance.
So Bala sir, you can take up the questions if any there in the chat box.
Yeah.
See, one question I have seen, and quite often this is asked, is that whether reimbursement of expenses is a related party transaction or not. Suppose if a related party, a director, has incurred some expenditure and he has been reimbursed by the company, actuals. Similarly, a KMP has incurred some expenditure on behalf of the company and was reimbursed on actuals. Is it a related party transaction? According to me, answer is no.
No. Yes, I agree, sir. There is, it's not a related party.
Recently, one gentleman asked me a question that his managing director went abroad, and there he went abroad to meet the dealers. So there he found it that there were about 5 to 10 dealers were there. Though initially he thought that he will go and personally meet them on one-on-one basis. Considering the distances, he thought it is prudent to invite the 10 dealers for a dinner and then discuss with them whatever the business operations are there. So because for that, what happened is, in the hotel where he was staying, he booked a business room, a conference room kind, and he has organized a dinner and he has paid for that from his credit card. And when he came back, the company has reimbursed the expenditure, whatever he has incurred. Is it a related party transaction? Answer is no. Because whatever he has incurred it for the purpose of the business and it has been simply reimbursed to him based on that bills produced or whatever it is not a related party transaction. At the same point of time, let me give another example that a subsidiary company is sharing the premises with the holding company. The premises are owned by the holding company and subsidiary company is sharing certain shared services. Like your premises, they are sharing electricity expenses, software, security, administration, all the things. For which the head office, the holdco is giving a debit note or an invoice to the subsidiary. Is it a related party transaction? Answer is yes. It is a related party transaction there. So because this question quite often it comes, that's why I thought before you take up the questions, I will clarify this.
Yeah, you are very right actually, because it all depends upon the circumstance, the case to case basis. As you rightly said all along, that unless we know the full history of it, the question cannot be answered. Just simply somebody is asking if the reimbursement, the expenses are related party or not, you cannot answer that question straight away. It may be yes also, it may be no also. As you rightly explained right just now, that is the way we have to look into that.
Yeah.
Yeah, let us go into the questions. In case of the small private companies, very limited transaction, including rental premises, this I think we discussed, we talked about it.
Mohana, all the questions are to you and I have to supplement it because you are the panelist.
Okay.
Whatever Bala sir is asking, they are to be answered by you, and wherever I have to supplement it, I will do it.
Which type of transaction will not be considered as RPT? I think probably readers will see the last YouTube, which we had elaborated, discussed. So I will not be taking that question here. Whether the proposed transaction should be aggregate with the other related party transactions between Y Limited and its subsidiaries and A Limited and its subsidiary joint ventures to determine the materiality threshold for the purpose of shareholders approval.
No, you don't, if I've understood the question right, he is asking whether the transaction with A Limited and its subsidiary has to be aggregated to arrive at the materiality. If the answer is no, it is only with a particular single related party transactions. If you have a group of transactions during a financial year and it is exceeding 1,000 crores or 10% of the consol, then you require an it is a materiality transaction and require prior approval of shareholders, but not of the group companies together.
Somebody saying, please share the PPT. It is already there in the YouTube. It will be available to you. Somebody is asking, please explain promoter group definition under ICDR.
Promoter group definition under ICDR is, as ICDR says, that promoter is a person who has been named as such in the offer document, annual return, or the person under whose direction the board acts. He is said to, or who has the control over the affairs of the company, is said to be the promoter. If that promoter is an individual, then the promoter group, how do you define it for the definition of Companies Act? His relatives, as well as the companies where he holds, he and his relatives and the firm in which he and his relatives hold 20% or more, hold 20% of a body corporate. To put it simple, if a promoter or his relative or the firm in which he is interested hold 20% of a body corporate, then that body corporate also would become the promoter group. And if that a body corporate, which we now spoke about, holds 20% in any other group of companies, that also becomes the promoter group. This is in case of when a promoter is an individual, his relatives, and when he and his relatives or the firm in which he is interested or HUF hold 20% of any body corporate, then that body corporate, and that body corporate, if it holds 20% in any other companies, those also form part of promoter group. If a promoter is a body corporate, if then the holding subsidiary, associate, fellow subsidiary of that body corporate becomes the promoter group, and where that any other body corporate holding 20% of that promoter will also form part of promoter. So there are two limbs to it for a promoter group, whether it is an individual promoter or whether a body corporate is a promoter. So it depends upon who is the promoter. You have to arrive at the promoter.
Dear sir, as you have specified RPT as per the accounting standards, all those have also to be taken while calculating the limits of the shareholders' approval under the company side and also LODR. Kindly clarify. Thank you. I think, Sudhakar, I think you discussed elaborately last time on these accounting standards. You actually said accounting standard per se talks about transaction and disclosures related to financial statements and preparation of the financial statement. Whereas approval related matters, which are actually governed to the respective companies act in case of all the companies, and the LODR in respect of the listed companies as such. So these two things is to be distinguished accordingly, that we will have to go by that. So question is not.
As far as the disclosures are concerned, there are no threshold limits. Every transaction is to be disclosed. There are no threshold limits according to me.
Correct.
Whereas for the purpose of compliances, where you require shareholders' approval, there are certain threshold limits are there. And similarly, where audit committee of the holding companies, the listed entities approvals are required, there are certain threshold limits are there. Otherwise, every transaction with the related party is to be approved by the audit committee. For that, there is no threshold limit. Even a single rupee transaction is also to be approved by the audit committee.
Yes.
Can you please give
to supplement that, sir, to supplement that, if the transaction is in a subsidiary, then it goes to the, of course, goes to the audit committee of subsidiary. There is no limit, as you rightly said. But whether it has to go to the audit committee of the listed entity, there is a limit, which currently for this current financial year is 10% of the consol of that respective, 10% of the turnover of that respective subsidiary of the preceding year. That is of 31st March.
1,000 crores, which is lower.
Lower.
Correct.
No,
Can you
for
please-
audit committee, it is 10%, sir. If when it comes to shareholder, this 1,000 crores also comes into.
Correct. Yeah.
Can you please give some example for the purpose and no effect?
I already said that. Purpose and purpose and no effect means what? Yes, we have entered into a transaction. Okay. And that purpose is there. But ultimately, he has not given the benefit to the related party. Subsequently, because there is a change of mind, and then we said, and then don't do it. I am giving some money to Bala sir and asking him to give it to Mohana. That is, purpose is there. I have given the money to you. Now again, I changed my mind. I asked you, don't give it to Mohana, keep it with you only. So effect is not there. And Mohana is a related party to me. So because the purpose is there, the effect was not there. So it doesn't come into related party transaction. I hope I am clear.
Yeah. Respected sir, madam, is the term purpose and effect defined in any other overseas jurisdiction regulation? Question number 2. What are the things covered under the purpose and effect? Can companies set criteria in the RPT policy to exclude certain transactions from the purpose and effect test?
Sir, simply purpose and effect, you go as per the dictionary meaning. That is sufficient.
Yes.
Number 1. Number 2, purpose is what? The intention. What is your intention? Effect is what? The intention has been fructified or not. Simple it is. And second thing, as I told you, that these are all round tripping transactions, which are, you can call it as a camouflage transactions. In fact, several times people ask this question, by that it is very difficult to identify. If your conscience is clear, it is very easy to understand all these kind of transactions. Okay. So it is not a rocket science is involved, no doubt about it. At the same point of time, it is not simple, no doubt about it. In fact, in one of the forums recently, when I was addressing, sir, it is very difficult. I said, life itself is very difficult. Forget about related party transaction.
To add to what Mr. Sudhakar was saying, for the purpose in effect, as he said, there is no guidelines, no definitions. This has been adopted by the regulatory. The reason is there has been very innovative structures saying that the transactions, it looks like it is being done with a unseemingly a related party, but the end result is to benefit a related party. So that is the reason they have brought this, that you are doing a transaction. You can always, say that I have done a transaction with an non-related party. Where is an approval? But then that goes and gives an effect to an unrelated party. So that is why this restriction has been. There has been some innovative structures. So to arrest that, to compact that, this condition has been. So you need to be very clear that even though you try and put it in the paper that you are doing a transaction with an unrelated party, you need to be having in your mind, consciously be aware whether this is going to give an effect to one of, if for the, you are giving this for the purpose and to benefit one of your related party, then if tomorrow the regulatory finds it out, then that would fall under this particular rule, and you will get caught. So it's very simple, as he said, to understand. You need to know the substance over the form, what transaction you are carrying out.
See, just to add it further, whenever you want to understand the intention of the regulator, whenever you are interpreting the particular regulation or a provision, it is always advisable to you to read. Whenever an amendment bill comes or a bill comes, there are objectives of that bill also have been given. Every clause of that bill has been explained. What is the rationale behind that? Similarly, the amendments which have come to Regulation 23, as I was mentioning, it is based on the committee constituted by SEBI to recommend them certain improvements into the Regulation 23 is concerned. If you read that, the purpose and effect, why they have brought that words, it is very clearly, the committee has explained that intention, why they are proposing these amendments. You will appreciate that when you read those clauses very well.
Coming to the third question here, can companies set criteria RPT policy to exclude certain transactions from the purpose and effect test? I don't think, because you are guided by the regulations. You cannot
Yes.
just overwrite your policy that we will exclude this and we will not do this and all this. You cannot do that. Because
True.
this cannot be done at all. Because everything you have to look into from the regulatory perspective, you have to comply with it.
True.
For omnibus RPT, whether both audit committee and board approval is required.
For omnibus approval, it is the only the audit committee
Audit
approval.
committee, not the
Ah,
board.
only
It is
the
only the
audit
audit
committee
committee.
approval is
Yeah.
required for omnibus transactions, because the reason being it is a repetitive kind of transaction. You need not go time and again. So in the beginning of the financial year, you ascertain what are the repetitive transactions that you are likely to take in, and you take the audit committee approval, because for every, see, why a board, for an unlisted company, why a board approval is required? Only when those 7 transactions mentioned under section 188 is not in ordinary course and arm's length basis, then only you need a board approval. But every related party transaction of an unlisted company requires audit committee approval. So that's why you go to the audit committee in the beginning of the financial year. Same is the case with the listed entity, whether it is in Companies Act or LODR, they also require audit committee approval for all related party transactions, irrespective of any limit. Only in case of where they are not party and their subsidiary is a party, then that limit of 10% of the 10% of the standalone audited financial of the previous year, if it exceeds, that also get added to their list to place it before the audit committee. So omnibus doesn't require a board approval. It requires only audit committee approval, as every transaction has to be approved. Every related party transaction has to be approved by the audit committee. Only companies has an exemption of saying whether it is in arm's length in ordinary course of business, whereas LODR doesn't talk about it. So every other transaction requires audit committee approval. But if I could add, 177 gives an exemption with respect to approval of RPT. If it says that if the transaction is between the holding company and the wholly owned subsidiary, and if it doesn't fall under any of the transactions mentioned under section 188, then audit committee approval is not required. So that is the only exemption where you don't need to go to audit committee. That is to only under the Companies Act. LODR doesn't provide any exemption. All transactions of listed entity has to go, plus subsidiaries within if they attract the threshold limit.
Mohana, recently one question has come to me that where it is prohibited that the listed company cannot avail that in the ordinary course of business at arm's length. Section 188, listed company is not prohibited.
No, it is never prohibited from. Okay, that's because I said that there is no such differentiation in LODR. Probably somebody would have this question in mind. I agree. Listed companies first has to also comply with Companies Act and plus LODR. So for them also it is applicable when it is in ordinary course and arm's length basis. They are not required to go to the board approval if the transactions fall under that 180.
Yes. See, because my answer to that was the same. No doubt about it. It is not prohibited anywhere. Similarly, that if it is in the ordinary course of business and at arm's length, the threshold limits of Rule 15 are not applicable to the listed entity. Because if you see that under the listing regulations, the listed entity has to go to the shareholders only in case of material related party transaction. Okay, where it was till recently, it was the 10% of the consolidated turnover, whereas the Rule 15 talks about 10% of the turnover of the company. It was standalone turnover. So if it is in the ordinary course of business and arm's length, Rule 15 is not applicable to you.
Yes, true.
Similarly, second thing is that board approval, listing regulations doesn't talk about board approval at all. They talk about either audit committee approval or the
shareholders approval. Agreed. True. Very true.
That
but
is
you
one
cannot
part of it.
go to the shareholders without recommendation from the board. So naturally you will
correct.
place it
Obviously.
before
Obviously. Second question. See, There also, I want to tell the participants one thing. Whenever you are passing a board resolution, sometimes we have to quote the section also. In this case, section 188 is not applicable. So you don't need to say in pursuance to the provisions of section 188. Unless until it is applicable to you. That is one part of it. Second part, recently, Mohana, one more question has come to me. A company need not constitute an audit committee. It is an unlisted company.
Okay.
Unlisted company, and say a private company, for example, it need not constitute an audit committee. Whether the audit committee's obligations have to be discharged by the board? Question number one. Question number two, since audit committee is not there, can the board give omnibus approval for the routine transactions or not? First, you answer these two questions, then I will put the third question to you.
Okay. So the first question is okay, the presenter has turned out to be a participant and asking questions. Nevertheless, I'll try and give you the answer. What, according to my view, a private limited company is not required to have an audit committee, true. And whether board has to discharge the functions of the audit committee by giving omnibus approval for the transactions, I would say no, that would have been the function of an audit committee if it was constituted. But nevertheless, as a good corporate governance practice, board can always take note of the related party transactions in the beginning of the financial year if they are well aware that it is going to be a repetitive transaction and they know the nature, tenure and the amount. They can, board can have a list placed and approved by them, and that can be reviewed by the board. It is a good corporate governance practice that can be set up by the private limited company, which does not have an audit committee.
Let me say that board is not empowered to give omnibus approval. Neither under the Companies Act nor under the listing regulations, board is not empowered to approve any transaction on omnibus basis. Number two, unlike CSR regulations, under section 135, CSR provisions, not regulations, sorry. 135 says that wherever there is no CSR committee, the committee's obligations are to be discharged by the board of directors. That kind of wording is not there for audit committee. So audit committee, whatever the functions of the audit committee, board need not discharge that. That means technically where audit committee is not required, that company has to comply with only 188, not with 177.
Yes.
As you rightly said, wherever the related party transactions are there, as a good governance practice, keep the board informed about it.
Yes, true.
Yeah.
Yes,
so
sir.
that means, Sudhakar, whenever the audit committee is not there, not required in unlisted public company and as well as the private companies, none of the provisions relating to the audit committee provisions are applicable to that company. They need not comply with that as far as this is concerned.
Correct?
Yes,
Correct.
yes.
Absolutely.
If new subsidiary is incorporated, then what is the turnover threshold is to be covered? Do we need to take approval for every transaction before entering to subsidiary?
Okay. New subsidiary of a listed entity. So probably their question would be stemming from the point that but the new listed entity would not have any balance sheet prepared, right?
Yeah.
Because it depends upon the 10% of the standalone audited financials of the previous financial year.
Yeah,
if
that
they
is the question.
Don't have,
turnover. Yeah.
So if they don't have an audited accounts in place, then how would they ascertain whether it is exceeding 10% of their standalone audited financials of preceding year? So in that case, they may have to only go in for an audit committee approval of that subsidiary and not be taken to the listed entity. Unless it falls under the threshold of that 1,000 crores and becomes material for them to take it to the prior shareholders approval of the listed entity.
I will slightly look this particular transaction in a different way.
Okay.
As you rightly said, that company is not having a balance sheet, so you don't know what is the 10% of the standalone turnover of the company, no doubt about it. But that company is having a capital, and the turnover is disproportionate. I mean, sorry, the transaction with the related party is disproportionate to the capital of the company. Suppose, say, for example, the capital is, say, 10 crores, and you are entering with a related party transaction of, say, 50 crores or 100 crores. It's quite substantial amount. So you cannot simply say that, look, I have not prepared the balance sheet, so I will not go to the audit committee of the listed entity. You have to go. So you have to, sometimes you have to see that substantialness of the transaction of the company also. That is one part of it.
Yeah, you can review it, but it's legal. If you go by legal strict provision, you don't have the rule. But I take your point that if you find it substance over form, you find it that your capital is only limited, and then but the transaction seems to be on a higher side, then better you take audit committee approval along with the disclosure to be made in the financial.
Why, say, for example, you say 1,000 crores turnover. I will take it to 999.99 crores. So
Okay.
proxy advisory forms are keeping a hawk's eye on the listed companies. So to avoid that these kind of comments from them, it is always advisable. It is always advisable wherever you feel like the transactions are substantial transactions, better to take the audit committee approval of the listed entity. One part of it. Second part of it is the transaction what you are entering into. Because of any reasons under regulation 30, you have to disclose it to the stock exchanges by the listed entity. The subsidiary company is entering into a transaction which is a price sensitive one, and you are intimating the stock exchanges. That kind of transactions also, though it is for the newly incorporated company, it is advisable to take the audit committee approval of the listed entity. So in general, we cannot say either or no or yes, but it depends upon the transaction, the sensitivity of the transaction, the substantialness of the transaction, whether it requires audit committee approval of the listed entity or not. Again, here I will say always is that the company secretary has to take a conscious decision. By taking the approval of the audit committee, you are not losing anything. But by not taking the audit committee approval, you have something to lose. So call, you have to take it.
True.
So that in practice, every company, whether it is a private company or unlisted company or whatever the company it is, everybody is actually working with the budget. Their annual budget, annual turnover is actually there. They are actually monitoring, they are doing it. So it is not necessarily your audited balance sheet and all the thing as we go by the regulation. But the thing is, once you know this is the total budget is available, as you rightly put it, the materiality with a reference to that can always be ascertained. Accordingly, you can take a decision.
Sure. True, sir. Very true.
Is that 1K limit of the material transaction also applicable to the transaction by the unlisted subsidiary company with a related party?
Sir, sorry.
Is that
I lost
1K,
it. If you could repeat the question, sir.
Is that 1K limit of the material transaction also applicable to the transaction by unlisted subsidiary with RPT?
Is that question asking that material transaction is also applicable for subsidiary?
Now he is asking that the limit what you are talking 1,000 crore limit. That's what he has put, I think. Is applicable to the transaction by the unlisted subsidiary company also.
Yes.
Yes, very much.
Very much.
It's applicable.
Okay. The reimbursement question we already discussed. RPT purpose and effect we already discussed. A Limited has taken the secure loan from the bank, and then the said loan is actually providing the job work to the subsidiary company for business purposes in ordinary course of the business. Is this related party?
Related party between whom? The company and the bank is the question.
No, it reads only this way. A secure loan taken from the bank, and the said loan was utilized to providing the job work to the subsidiary company.
Loan was taken from the bank.
Yeah. Loan is taken from the bank. Okay. And that loan is utilized providing job work to the subsidiary company.
So where is the question of related party transaction here?
Transaction.
The question is not complete even.
True.
Pratik, are you there? Can we hear from you on this? In case of the private limited company where the audit committee is not applicable, I think this you actually discussed. A company on RP is a listed company earns commission for facilitating some business of a MNC. The MNC supplies raw material to the listed company. The purpose of the transaction was not to benefit the related party, but can be a commission received by the related party be considered as an effect. The related party independently acquires the business intent invoicing for which they are getting commission. I'm not clear about this question.
Yes, sir. Not. I think the facts are not very clearly
Yeah.
coming in.
Namita, are you there? Can we hear from you?
Hello. Yes, sir,
Yeah.
I'm there.
Yeah.
Yeah.
The-
Sir, actually, this company, which is a related party, was doing business long before that MNC started supplying to the listed entity. This business was beforehand the transaction which MNC started with the related party. But when this transaction, this MNC started transaction with listed entity, this amendment came into being, and then would it fall into that purpose and effect? Because purpose was definitely not, because this RP providing services to that MNC was beforehand this transaction. But definitely they are getting commission by this transaction. So whether this will come under purpose and effect, that is my question.
Ms. Namita, you are saying related parties. So who are the related parties over here? Is that the
See, A Limited is a related party of B Limited. And A Limited is providing services to MNC, who is in turn supplier of B Limited.
Okay.
No, A Limited is what it is doing? A Limited is?
A Limited is a service provider to MNC, who is basically doing indent invoicing, very small type of service to that MNC. But that MNC in turn supplies raw material to that listed entity.
So this is nothing to do with this. See, that means what basically.
But they are getting commission on that transaction, sir.
No,
that
that
A
is
Limited
fine.
is getting, yeah.
That is fine. What I'm trying to say is that you said that A Limited and B Limited are there, and that there is in between an MNC is there. That MNC is not related to neither A nor B. Am I correct?
Right, right.
And there is some transaction is going between A and that MNC. Another
Yes.
transaction is going between that MNC and this particular B
Right.
Limited is concerned.
B Limited.
So this is no this thing, you know, by suppose tomorrow, if A Limited is disconnecting that service activity, is that
Right.
MNC is going to disconnect the activity between the MNC and the B Limited? These are two independent transactions, if I am not wrong.
Correct, sir. Yeah.
Discontinuation
Because
of
that-
one transaction is not going to affect the other transaction.
Yeah.
In case of purpose and effect, what happens is that these transactions are interconnected. You are obliging the third party, and the third party is obliging you by giving a benefit to your related party. So those
Yeah.
are interconnected transactions are there. They are not isolated transactions. Whereas the example what you are giving is transactions in isolation. These are two separate transactions. So they are not having this purpose and effect.
If the
Yes,
private,
Balaji.
if the private limited company has availed shared services like admin, IT, etc. from the holding company or JV partners, can these services be considered in the ordinary course of the business of the private company? Does the private company need to check limits under section 188 of the Companies Act?
So here it is only there is no listed company involved. Probably I understand it in that
Yeah,
way.
it is only a private company. Listed company is not there.
So it's between two private limited companies, and they are availing services from the holding company. So yes, it falls under section 188, So they should be able to prove that it is in ordinary course of business, that is for the benefit of their business or in furtherance to their business, that they are utilizing the services of the holding company, and they should also be able to justify that it is in arm's length. If that is done, then they need not go to the board approval only. And if it's a private company, it may not even have an audit committee. So it will have to only board approval would also be not required under section 188. But as a governance practice, they can have a board approval placed. And since it's in arm's length and ordinary course of business, we need not even go into looking into the threshold whether it exceeds 10% of the turnover or not. So I would say that it doesn't require any approval if they are able to prove it is in ordinary course and it's an arm's length.
As you said, if the RPT of subsidiaries exceed 10% of the standalone, then it requires the approval of the audit committee of the listed company, or 1,000 crores or 10% of the consolidated turnover, then shareholders of the listed company. So if the subsidiary is also listed, still it has to be approved by the listed company, or both companies' approval is required. Once 10% shareholders standalone gets exceeded, both audit committee would require. Kindly clarify.
If there is an listed subsidiary and if the approval is taken at that level, then you need not go to the ultimate listed company for obtaining approval. That is very clearly laid down in regulation 23. It is only the listed subsidiary which has to ensure compliance. You need not go to the ultimate company.
Section 188 starts. Except with the consent of the board of directors given by a resolution, no company shall enter into any contract arrangement. So how only audit committee approval is sufficient for omnibus RPT?
Except with the consent of the board, that is with the without the prior approval of the board, you cannot enter into those 7 transactions laid down in 188. But further, when you go down in the proviso, it has said that nothing in this section will apply if it is in ordinary course of business and arm's length. That's why you don't require a board approval. Whereas section 177 says all related party transactions and the later modification to it require audit committee approval. And yes, of course, there is a small exemption as we
Mohana, I would like to actually share something. What happens
Yes,
if suppose today's younger generations, they only read the top of the thing, they don't read the full text. Provision, explanation, etc. is just omitted. That is why this sort of the question comes.
Okay.
A promoter direct, I think some cross talk is happening. Who's actually keeping the mic on? Can you please shut it off? Rupali, I think
Yes,
your mic
sir.
is not muted. You are not
Yes,
on mute.
sir.
Yeah. A promoter director of a private company running the hospital business, who is also a doctor by profession, receives the professional fees from the private company. He does not draw any salary from this company. In such a case, will it come under office of the profit, considering he is discharging the services in professional capacity, being a doctor himself?
So if I understand the question, he is a doctor and he is receiving remuneration as a doctor.
Yeah, he is a doctor. He is running a hospital business, and he is also receiving the professional charges as a professional fees from the private company.
Okay, so probably the hospital is vested under the private limited company, and he should be the promoter, if I understand, and he's charging professional fees for the service he is rendering.
Correct.
And since he is not a director, I don't think any of these provisions would get attracted. If he's a director on that private limited company, then he becomes a related
No, it is there, promoter director.
Promoter director. Okay, he is a promoter and a director, but nevertheless, he is receiving this fee on his professional capacity. He has the, the expertise. So it is not an office of place of profit under section 188. But yes, the compliances as mentioned under section 197 saying that, but being a private company, I don't know whether it would have an NRC. Probably there should be a justification and a board approval for it as a good practice. But I don't see it as requiring an office of place of profit.
So you are right. So long as the justification for the professional services is justified, then it will not. That is right.
Yes, yes,
Yeah,
yes.
I
That's
agree
my
with you.
views.
197(4) is applicable to a private limited company. So
But
197(4) shareholders approval is required.
Yeah.
It is an office of place of profit. Okay. As you rightly said, Mohana, NRC is not there for a private limited company. So NRC recommendation is not required. If it is a public company, yes, if there is an NRC, the NRC committee has to certify the specialization of that particular person. But 197, 1 and 2 and 12 subsections are exempted for a private limited company, but remaining sections are applicable to every company. So 197(4) deals with this, and that is applicable to a private company also. So hence shareholders approval is to be taken.
Subsidiary company has approved the payment of the MD for 3 years in 22. Remuneration which is paid to the MD exceeded 10% of the standalone turnover. Then whether the approval of the listed company is required for current and the next year.
Okay, so it is a subsidiary of a listed entity, and this transaction is between the subsidiary and its related party. It's a remuneration paid, and it exceeds 10% of the standalone turnover.
Yeah.
Requiring approval of listed entities audit committee. Is my understanding right? Is this the question?
Yeah, I also understand the same way.
Okay. Fine. Yes, if it exceeds 10% of the consol, and if it is a transaction between the director and it is a remuneration. So is it a transaction between the company and its director? That is, he is receiving remuneration for his services. So I don't think so that because for the Ind AS is not applicable for the subsidiary. It is only section 276 that is applicable. Of course, director is a related party, but is this to be construed as a transaction between the MD and the company? I doubt, because it's an employment. So what's your view, sir?
It is a transaction with a related party, Mohana.
But
188 is not applicable, no doubt about it. Okay, because it is not an office of place of profit. Okay, so it is a transaction with a related party, and if the transaction with the related party exceeds 10% of that turnover, and it is a subsidiary of a listed entity, it has to go to the audit committee of the listed entity.
So KMP transactions with KMP is covered under Ind AS.
No, that is different. That is different entirely. But what I'm trying to say is it is a transaction with a related party of the subsidiary. You don't need to bring Ind AS at all.
No, I think under 276, I would consider this as a remuneration under 196 and 197, which is in ordinary course and arm's length. He is receiving his remuneration for the capacity he is holding.
That's why 188 is exempted. Ordinary course of business, arm's length, and it is not office of place of profit. Because of all these things, 188 is exempted.
I agree, sir. I agree. They are never attracted. But for this 276 itself, I'm saying, even though director being a related party, there is no transaction. It is for the remuneration which he is receiving for him in his capacity as a employee of that organization. There is no transaction, is my view. So I don't think that it is a related party transaction. I mean, I slightly differ, but we can discuss this. Whereas if Ind AS comes into play, if this was to be a listed entity, then KMPs are covered under the Ind AS, saying that any transaction, there the remuneration, if you see in disclosures, we give the remunerations of KMPs, but not under unlisted companies, we get it because we don't see this as a transaction. So this is my humble view, sir. We can discuss this further and design. Yeah.
See, according to me is that a managing director or a director per se is a related party. And
Yes,
any transaction with that related party requires audit committee approval. Any transaction. Okay, there is nowhere it is there that by this is a transaction which requires approval of audit committee. This transaction doesn't require the audit committee approval. So every transaction with a related party requires audit committee approval. Of course, 188 is only for some restricted view of transactions.
not
So
bringing
188 is not at
188.
all applicable.
Yes, I agree with you completely. 188 doesn't come into play at all.
So as far as 177 is concerned, every transaction with a related party, it is applicable. Audit committee approval is to be taken. So what we say normally is whenever the KMP at the time of his appointment, whether it is a director or a KMP or whoever it is, at the time of his appointment, he is not a related party. Subsequently, he becomes a related party. So technically what happens is whenever you give even an increment to that managing director or to the KMP, that amounts to related party transaction. It requires an audit committee approval. So some companies, what they do is whenever they are taking the audit committee approval, that time itself, they say that any kind of increments as per the policy of the company, they approve it once and for all. Then you don't need to go back to the audit committee or to the NRC time and again.
True.
So it all depends how you are structuring that transaction. If you are not structuring the transaction the way I have mentioned, you are only approving for that particular year, then every year, whenever there is a change in his remuneration, they have to go back. And in case of a listed entity subsidiary company, if it exceeds 10% of the turnover, again, you have to comply with regulation 23 by going to the audit committee of the listed entity also. You examine it, we can discuss it, no problem.
Yeah, sure,
What
sure.
my view is.
Sure, sir.
I don't know, here somebody has put actually following this question. It can be shown as a loan to the subsidiary. And for that, the answer has been given, yes, the transaction between A and the subsidiary. I don't know, how can it be a loan or something like that? I don't know, when he is getting a remuneration. Will sale of surplus laptop by the chemical manufacturing company to its fellow subsidiary be considered in its OCOB?
Sir, see, like this, you can have n number of
Ordinary course of business.
hypothetical or academic transactions. We have to see the concepts of the this thing should be clear. Otherwise, I can give n number of examples and I can put n number of questions. There is no point of answering that. Last week also I have mentioned the same thing, that there is no point of asking the questions and getting the answers in webinars or forums like this, because if you say something and if somebody taken as a gospel truth and then go and get something, if there is a problem, tomorrow they will quote us in that webinar, Mr. Sudhakar or Mohana or Bala sir has mentioned like this. And because of that, I complied, I followed them, all these things, we get a bad reputation because of that. So I always hesitate to answer questions like this. Let us confine our discussion to the regulations, to the provisions,
Provisions.
the section itself. So the concept clarity should be there. At the same point of time, if you want examples, there are innumerable number of examples have been given in the revised related party transactions guidance note. In fact, when we were revising the guidance note, which was released a couple of months before, we were very liberal in giving as many examples as possible, so that the person who is reading that, it will help him a lot. Kindly go through the revised guidance note.
Section 8 company, which is the rendering CSR activity to the group companies, whether it is considered to be an arbiter.
You see the definition. Instead of asking a question, you have to see the definition. Section 276, AS 18, India 24, if it is a listed company, then also see rule 21 ZB, and then you arrive at whether it is a related party or not.
Whether the proposed transaction should be aggregated with other related party transaction between Y Limited and its subsidiaries, A Limited and its subsidiaries. This I think you answered already.
Yeah, we answered.
Intricacies applicable. Yeah, this you already answered. Does a rental agreement get covered under the leasing of property under section 188(1)(c)? Can you elaborate the leasing of the property between the group companies? And does it only refer to giving a lease, or also it covers property taken on lease?
This rental agreement covered under leasing of property.
Whether it is under section 180, under a section 188, 1C.
Leasing of property is covered under 188. But
He is asking two things. One is, does a rental agreement get covered under leasing of property under section 188, 1C? That is
Please
So,
refer to
section 180
the,
covers-
please refer to the guidance note. It is clearly the answer is given there. I could have left it there, but anyway, I will answer the question. Rental agreements, leave and license agreements, or doesn't amount to lease agreements.
agreements.
And 188 talks about lease agreements only. So 188 confines to 180 to lease agreements. Other rental and leave and license agreements doesn't fall under the purview of 188.
Hmm.
Refer to the guidance note. The rationale for this has been very elaborately given there.
I think that's all I have done with. There's no more questions are there in the chat box. Any
Great.
participants would like to say anything on this? I don't mind. I can hear from them. Otherwise, there's nothing is left.
Sir, can you please share the PPT and recording if possible? This is Rajesh Jasti, IP.
No, recording will be always available. It is actually put in the YouTube channel. It will be available to you.
Okay.
Yeah.
And a PPT, sir, at least PPT, whatever the Sudhakar sir has discussed, right? That's
The YouTube comes along with the PPT, no?
okay. 1 point.
Yeah.
Thank you. Thank you, sir.
So
I
anyway,
think-
that our Balasar, our next webinar is going to be on the remaining portion of the RPT. I think we'll try to cover everything, whatever is remains there. I think especially approval mechanism, what kind of approvals we have to take from the board, from the audit committee, from the shareholders, and what are the limits, threshold limits, etc., etc. And so I think if I am not wrong, after that, what will be left out is only the reporting mechanism. If the time permits, we will cover that also in the next webinar itself. With this, thanks very much, Mohana, once again for joining us today and sharing your knowledge, and look forward for more such interactions.
Thank you very much.
Thank you very much to everybody. Definitely, I would say today's session was very interactive. And Mr. Sudhakar has excellently presented the latest amendment and the intricacies, etc. Other thing and all. It will be definitely helpful since this amendment has come with effect from 1st April 2022, where it will be applicable in the current year balance sheet. Many of the people will be still preparing the balance sheet, etc. So things can be well taken care of. I am personally very much thankful to Sudhakar and my personnel, because I always feel whenever I meet this type of the forum, I feel 20 years younger, number one. Number two, there is always a continuous thing. Education is happening, adding of the knowledge is happening. Thank you very much, sir. Mohana, many thanks for your excellent sharing of your knowledge and putting the insight of many things which you have come across in your organization, etc. Many thanks to you. Thanks a lot to everybody. Many thanks. I think with this we can close the session. Thanks a lot.
Thank you, sir.
Thank
you
Thank
so
you,
much.
participants.